Cool. Good afternoon, everyone. I'm super excited to moderate this panel now on merging DeFi and TradFi for scale. So over the last few years, we have been building DeFi infrastructure, blockchain-based layer infrastructure, interop infrastructure, and I think now we're at a point where we can really onboard real-world assets and traditional financial services at scale, and really scale that infrastructure that we've been building. I don't think DeFi was meant to replace TradFi, but to upgrade the financial system. I guess we already had a brief round of intros by the announcement. Let's just dive in, I guess. Why does merging TradFi and DeFi matter from your perspective?
I can start, yeah. So basically, we are in a momentum right now where TradFi needs DeFi to drive innovation and also new technologies, basically replacing and helping the process and the bureaucracies that we have right now in the market. But DeFi also needs TradFi because of the trust, the regulatory framework that we have in the traditional market, and also the access to the money in general. So we are in this convergence momentum right now, where TradFi starts to better understand what they can benefit from the technology, and also DeFi starts to get closer to TradFi, basically to see what they can improve in terms of the financial services that we have right now. It's a journey, of course. We're only starting we used to say, like, for a long time, the institutional money is coming, and we never really see that happening. But right now, with all the projects going on and all the tokenization, RWA, new projects on the space, I feel that we are really entering this new phase. But I am curious to hear your thoughts.
I would agree with that. I mean, I think for as much as like the institutions are here, we're still not at a place where we have kind of TradFi liquidity coming into the space, which I think we're all excited about for if and when that happens. But I think, coming from legacy financial services company, what got me really excited about the space is the ability to leverage DeFi rails in terms of upgrading legacy financial services infrastructure and institutional workflows that historically have been extremely manual, and the ability to, it's like so unsexy, but gets me excited, in terms of just like really upgrading a lot of how and the ways of working of kind of how traditional financial services work or don't work in a lot of cases. But I think in terms of that merging, what we've also been seeing is leveraging TradFi's products in the context of DeFi and really kind of upgrading the asset supply quality in the world of on-chain DeFi. And then so far what we've seen, which I'm sure we'll talk about, is to date TradFi leveraging crypto native or DeFi distribution, which again we'll talk about. But I think those two things have only converged over the past 3 years and will kind of continue to converge going forward.
I'll just add a couple more things. One, that the systems that we're using today are decades old, right? And there's been several challenges through the years that systems like blockchain clearly solve. So that's one of the things that is exciting for us. And the other one, at least what got me into the space, part of it was just being able to offer this more institutional products also to retail investors and figuring out a safe way to do that. And I think this technology enables that. Cool.
Yeah, right now we are actually at around $24 billion in real-world assets, $240 billion in stable coins, crypto assets around 3 trillion, but all assets in the world being magnitudes larger, around 600 trillion. So I think that's really the scale we can get to over the long term. But maybe in the short term or right now, what are the value propositions that the TradFi institutions are really looking for and appreciating in DeFi? And how does TradFi complement those? And I'm also curious about to what extent will TradFi institutions stay relevant, and what are the parts that they will still dominate in, as opposed to the, I guess, stuff you can automate or stuff where startups actually have an edge?
A couple of things. One is the ability of the blockchain to act as the transfer agent. And I think slowly we're heading towards that direction. It's inter-settlement, as we all know. It also reduces costs. 24/7, that's one of the things that we're really looking forward when we're building our products. We want to partner with other partners that can offer this capability. Of course, on the regulatory side, we have a few things that are still missing to be able to reach all of this, but I think we've come a long way the past 6 months. And then it also expands distribution to new systems that and a newer audience that we could not reach before with the current systems.
Yeah, I mean, I think to date, what we've seen is obviously there's a hugely growing and continuously growing market cap of on-chain stablecoins today. And so I think from a TradFi standpoint, I don't want to speak for asset managers, but anecdotally what we've heard is, you know, the interest in a lot of those asset managers converting some of that stablecoin market cap into money market fund holdings and CLOs and other types of kind of more traditional assets. And so I think that will continue. But in addition to kind of crypto or crypto natives, the tech has kind of enabled a lot of traditional institutions, whether it's banks, fintechs, neobanks, wealth tech platforms, to leverage the tech in a way that it makes it economically and operationally feasible for them to enter net new markets, potentially outside of the US, in the global South, in areas that it historically didn't make sense for them to enter into because the tech just made it like prohibitive to do so. And so it's really been seen as like an enabler for kind of like new businesses and new strategic imperatives for a lot of incumbents, whether again it's fintechs or more like incumbent banks or asset managers. And so it's been exciting to, again, in that convergence, to see that happening beyond just the world of kind of pure crypto natives.
Yeah, for me, it relies a lot on what Laura just said. It's the blockchain ethos, right? So it's efficient, it's transparent, it's cost-effective, it's 24/7. It's different from everything that the incumbents are used to. And with that said, they are able to create new products, new structures. And for me, actually, the new financial services of the future, they are being built right now, and we don't have exposure, neither visibility to what we can create there. So you need to think in terms of globalization and how we can access new markets. For example, now with our RWA product, you can basically offer this token to any country without the hurdles of, for example, a local QIC process or any type of burden or bureaucracy that we have right now with the traditional system. And of course, that crypto is bringing that like more and more to the banks. They are starting to realize what they can do, but we rely on the regulatory frameworks too. So I mean, it's a long journey. We are basically doing step by step this path, but things are changing, and I'm super excited to see what is going on and what will be built, especially with the banks, not only for the banks, but with the banks.
I think also one thing you asked at the end was how does TradFi, or how will it like complement DeFi or DeFi capabilities? And I think for as much as we've seen TradFi try to tap into new distribution channels, at the end of the day, for however much liquidity as there is on chain today, like the mass liquidity that exists in the world is off chain still, whether it's among retail investors or institutional investors. And the fact of the matter is that a lot of these kind of incumbent platforms have the distribution. And so I'm very excited to see the time where you start seeing a lot of these traditional institutions kind of integrating DeFi capabilities and abstracting away kind of the complexities into their platforms and opening up those new product services and capabilities to their existing distribution bases. Because I think that's something that historically I think we've like taken for granted. And people don't realize how difficult it is to build up that distribution, which a lot of those incumbents do have. So I think it kind of goes both ways from a distribution standpoint, but I think that's something that they can kind of bring to the table in terms of complementing DeFi.
Yeah, and I guess you would still have like asset managers, like we just heard in the previous panel, Janus Henderson managing funds. They're just running on upgraded infrastructure with more transparency, higher efficiency, and faster settlement times, composability, so on and so forth. And yeah, I guess in the earlier days, we've seen many TradFi institutions working on their own private permission chains, to some extent EVM-based, but also some others. But in recent years, we actually saw more and more deployments on public Ethereum and other public chains, with all the money market funds coming on chain, also just chain as Henderson product that's being launched. How are you thinking about what's like an institution-ready chain? Like, and what are the trade-offs that are usually being considered, for example, in terms of credible neutrality versus, I guess, control and compliance aspects being some of those factors, I guess?
So I think like in general, those things aren't necessarily at odds, except maybe when you talk about like the base layer, but like from a fundamental perspective, especially when it comes to institutions providing liquidity and actually investing in on-chain assets, there's certain things that when they compare kind of the way they do things today versus a blockchain-enabled world, the technological features have to be at least be equal in terms of them actually kind of considering deploying capital and putting capital at risk on-chain. So things like low latency, high throughput, deterministic, and near instant finality, all of those things like need to be there. Like that's like table stakes. The reliability of the platform, making sure it doesn't shut down for whatever reason. Like all these things are obviously exist in TradFi today. And in addition to that, I would say transaction and portfolio / balance privacy, I think need to be in effect because you don't want, VanEck and BlackRock trading on the same network and then them seeing each other's holdings or their strategies or whatever that may be. So all those things need to be like table stakes. And then on top of that, I think you're able to still reap a lot of the benefits of these like private permissioned networks, potentially at the application or the wallet level, whether it's KYC, transaction monitoring, AML, and kind of effectuating a lot of the regulatory nature of securities or whatever it is, programmatically into, again, at the token level or the wallet level or the application level. So I think those things can kind of coexist. When it comes to institutions trading and transacting with each other, I haven't decided, I'm not so sure yet that it necessarily needs to be or will be on a public permissionless network. Like I think you could have purpose-built chains specifically for institutions to trade and transact with each other as long as there is connectivity with kind of public chain liquidity and infrastructure and the ability to kind of maintain that composability, which I'd like to think is possible with Avalanche, but I think in that way they'll kind of have the best of both. But a lot of the reasons why a lot of those like enterprise chains historically haven't had a lot of success is because they're effectively islands onto themselves without any network effects, without native integrations of stablecoins and other types of tokenized assets. And so I think as long as an institution is able to kind of access both, we'll see a world where there is a purpose for public permissionless networks as well as for these like purpose-built institutional networks.
Yeah, for me, it's like the paradox between the open innovation and also control. So makes sense, like the rationale is super clear. So institutions, they need to know what they are doing. They need to know where they are basically putting their feet. So for the past years, crypto was something very complex and very new, more related to the economy of the internet. So of course that the private chains would make more sense for them to test. It's a matter of testing the waters and see what you can do there, having the comfort to move forward and also to scale, especially volume. Because imagine these banks, they are used to traditional products. They are in the industry for centuries. They are doing the same thing like in the same way for years. So you bring a new technology and you simply say, yeah, deploy like millions of hundreds of dollars here because it's cool, it's new, and it's going to help you. That's not the way it works, But when they start to realize what they can do, what are the benefits about it, and what type of products they can also access through DeFi and with DeFi, the things change. So they start to feel more comfortable, for example, to move some volume for EVM or more traditional, like public chains that they feel, I don't know, the level of comfort that it's needed to do that. And after that, they start to see that also they have potential to grow to other networks and to start to move volume and also the risk to other protocols. And if we are looking for the future, if we're looking, if we see the vision of the market for the next, I don't know, 5 years, it's impossible to don't have this scenario with a multi-chain world where you can basically integrate TradFi into DeFi and take advantage of the DeFi protocols also to create new structures. For example, like yield-bearing or collateral management, and with that, DeFi can definitely help a lot. And we also have stablecoins in the middle of all that, because if we talk about RWAs, we can see like a very great arbitrage of different type of products. For example, private credits, real estate, bonds, many other stuff, and also stablecoins in the middle, trying to be the on-off ramp of all this new market in this new economy. So I see that this is changing, actually. I mean, you guys are more used it on your day-to-day. We are not asset teachers at Wormhole, but we are receiving more demand, like day after day, that the companies, they are looking for diversification, and they are looking how they could mitigate the risk, also in terms of asset allocation, different chains.
I'll just add that so far for us, for instance, we only have a tokenized money market fund, some public chains. We didn't consider running it on a private chain. Anything that's coming next, I think for now it's also going to be in a public chain. The first product, of course, is institutional for now, so you have the whitelisting component, which kind of puts it in its own enclave. But we're looking for distribution, and if there's a way to do it, unless there's some specific transparency that we're looking after, I think we'll keep it that way for now. It's also, for us, maybe it comes down a little bit more to the KYC and AML component per country, and that's also, we need a bit more regulatory clarity here. From an asset manager perspective, if we launch one product with this partner and then we launch another product with another partner, now we have this one investor that we have to onboard on both different platforms, right? And that makes it a bit complicated. And then if you even take it a step forward and you want to list something on a let's say on a DeFi platform, a product that is tokenized and it's also across jurisdictions, we're also working on like how could that look like.
Yeah, I mean, you touched upon it already a little bit, but maybe we can dive a little bit more into how important interoperability is across chains, but also with legacy systems, and maybe what are the security challenges that still remain to basically allow for seamless and trusted solutions for institutional clients. And then maybe you can also give some examples.
Yeah, no, it's super important. That's why I'm here, and that's what Wormhole is doing in the market, because, I mean, we were founded 5 years ago, and we were already foreseeing the future like it is today, and we're just in the beginning again. So, I mean, to think in a market, in a tokenized market without it being multi-chain, cross-chain, like it's impossible. And with that said, we need interoperability not only within the blockchain ecosystem, but also with the legacy systems. For example, let's think about a bank that is doing a T-bond, but eventually we want Swift network to be connected with that. We want stablecoins networks to be connected with that. We want KYC process to also be into this system. And with that said, we can truly bring innovation and disruption to what they are doing right now in terms of process and operations, and show the real benefit of the blockchain technology in general. There's a lot of risks, of course. We have technical risks, we have security risks. I mean, what we're doing right now is working on risk mitigation. We're working with the latency timing of the transactions because it needs to be in real time. We are working with settlement risks as well. And of course, that all the security lays down on the validators, on the interoperability side. So it's important to have like on-chain data. It's important to have auditions on a real-time base. And this is already happening, and Wormhole is doing a great job what we have right now in terms of structure with the Guardians network, where we basically are decentralizing the control of the nodes to avoid like this centralization and also to avoid like risks of hacks and exploits, etc. It's easy to give examples. For example, we have Centrifuge here today, we have VanEck, we have Avalabs, we have a lot of projects doing a lot of cool projects on the ground. Not only like in US or Europe, we're seeing a lot of stuff happening in Middle East, for example, also in Latin America, in Asia, of course. So there's a huge momentum going on, and again, it's everything happening already, seeing this future and how we can integrate in a more seamless and very straightforward way the blockchains, the current blockchain market within this incubants and this new market coming on?
I think it's important, particularly when it comes down to liquidity. Using just our money market fund as an example, you can withdraw, or we have 24/7 X liquidity through our partner Agora through AUSD. So we're locking that perspective, but then there might be other similar products that, let's say you have a big position you're trying to unwind, right? You might have to go across different chains. So interoperability in this case is super important. We've heard about it a few times today, but Robinhood yesterday, they showed their tokenized product, and just touching on what Morgan was saying earlier on the incumbent companies and distribution, I think that's how it's going to look in the end, right? Like, it doesn't really matter for the investor. It should just be as seamless as just like getting to at that position and that's it. And now all of a sudden things are faster because they settle instantly and they're less costly, and this is on the back end how it's going to look like. So all of this can combine, I think, make interoperability really important.
We just talked about interoperability, and I guess you touched upon it already regarding Avalanche. Like within the Ava stack, you have interoperability across the subnets, which is a pretty cool feature.
Yeah, I think so. Yeah, I mean, within the Avalanche network, there's native intra-network interoperability built into it. But I think if you ask anybody, everybody believes in a multi-chain network, so it's not just that we think Avalanche only exists, though to that end, that's why we have partners like Wormhole and others to connect the Avalanche network to Ethereum and others. So I agree with everything you guys have said in terms of just like broad-based interoperability, not only with other chains and networks, but also obviously with legacy systems as well. So I don't want to belabor the point too much, but agree.
Cool. Yeah, let's shift gears a little bit towards some cultural considerations. To what extent would you say has there been a true mindset shift within TradFi institutions, and are those institutions really ready to fully embrace DeFi, or is there more still like a wait and see mode with a couple of pilot projects?
When I think about this question, I like to think about the size and what we define as institution. Are we thinking institutions, or do we think of New York when we talk about that and that kind of like large institutions? Or are we thinking also about like larger RAs and stuff like that, right? At least from our experience, and also that's actually the way we started, partially the way we started in crypto back in 2016, 2017. We saw this industry as quote unquote a competitor, but also something to work with, right? And, but then over the years, of course, you've always had every year like one of the larger institutions coming in, embracing crypto, and that's helped. And of course, BlackRock filing for the Bitcoin ETF, that also like brought a lot of trust that a lot of the other institutions globally, not only in New York, decided to start exploring and even adding just like Bitcoin in their treasury, and then also start exploring tokenization and learning more about it through just understanding the evolution of change through the years, right? Now, if you go more into the non so obvious jurisdiction or large cities, I think that there's still a lot to explain. But they're really excited about stablecoins, and that's been one that it's very seamless for them to understand and see why it can really improve their stack just by seeing how much they can save in costs on the payment side, and also from the administration perspective, it's great for them to have treasuries decentralized over using stablecoins as opposed to having just like single entities stacking on the treasuries, right? So yeah, I would say it's a bit double-sided. It depends on how you look at it, but we're way more advanced and further up than we were even like 2 years ago.
Yeah, I mean, I think to Laura's point, like the word institutions, it's like a very large word, right? And there's the way that we think about like segmentation, it's kind of like a spectrum from like crypto native or blockchain native institutions. And then you have like Web 2 challengers like fintechs and neobanks, and again, these wealth tech platforms who are a little bit more kind of like technologically progressive than some of the TradFi and kind of incumbent institutions. And then you think about their participation either on the buy side or the sell side. And so, when you think about a lot of the incumbents, the way that they've been involved so far is very much kind of on the sell side, selling their products and distributing their products. They've not been necessarily as much on the buy side. The extent to which they've been on the buy side is more of like investing from like a venture capital perspective, or potentially in some cases creating liquid token funds and others. But when it comes to like kind of buying traditional assets through on-chain rails, that has not really happened as much yet, or really at all. But I think we're all excited about when that comes. I think the middle kind of ground from a fintech standpoint, we're starting to see them entering on the buy side through opening up opportunities for their customers to kind of come in and access these types of assets through their platform, and inherently making them buy kind of on behalf of their clients. And then obviously, crypto native institutions have been from day one on both sides of the equation. So it's a process, and there's definitely like a spectrum, but it's definitely progressed over the past 3 years, and I think we'll continue to do so.
Yeah, I agree with Laura and Morgan, actually. Depends, of course, on the angle here in terms of the incumbents, the big institutions issuing their own tokens. I think we are still in a wait-and-see mode. Of course, that we have some big institutions in the forefront of this movement, because they are huge, they are global, so they see that if they eventually don't come in, they are going to lose market share. So it's also important for their strategy to be connected and well positioned in the market. But I mean, there's a lot that they still can do. And even when we look for asset tokenization, some banks, they have possibility to basically create their own crypto business units, which facilitates a lot the communication with the crypto native market in general. Some of them they are building internally, some of them are closing partnerships. So we have different models going on. When we look for these players truly assessing and buying tokens themselves for the treasury, for example, or to diversify funds, etc., is still in the top of the most liquid markets when this happen. For example, Bitcoin or Ether, or the biggest market cap tokens, or even ETFs. There are some private equity allocations and venture capital initiatives as well, but it's still that the majority of the innovation are still coming, especially on the RWA and on the stablecoin verticals, if I can say like that. And they're going to have an intersection in the near future. So they are testing, they are seeing what they can do, they are getting more comfortable, they are waiting for the regulator to do like a green light, oh yeah, this we can do, this we cannot do. And of course, there's the QAC component on the top of all that. So yeah, it's a game. They are playing, they are seeing, but they are interested on that. So that's already a good sign.
I just want to add a quick example that a bit of room for thought that sometimes we don't think about. But a month before we launched the tokenized money market fund, a wealth manager from Chicago reached out, hey, I want to learn what you guys do in crypto. Was telling him about this product specifically, and he was like, this is awesome. I love that it's like 24/7, instant liquidity. How can I have a customer that wants to park a bit of his capital? How can I invest, or how can I buy this product? And then just walking them through the process of like, and just in 2 minutes, I was like, oh God, okay, so you have to onboard with our tokenization partner, then you have to choose a chain you want to receive the tokens on, you also have to then whitelist the address of that specific chain, and it's too much, right? They just, in their stack directly, just want to like press a button and that's it. So I think that's also like room for thought when building partnerships and thinking how to work with and how you're building your product. Expect that person from like the Midwest, or somewhere that is not like New York, or like more in this, they want something more simple and just like that.
Cool. And just to finish off, very briefly, 20 seconds each, how does success look like in your mind in 5 years for merging TradFi and DeFi?
Yeah, very quickly, if I can resume in one sentence, for me, like DeFi should be invisible, but foundational. So everything should be backed by blockchain in a way or another, but on the user level or on the investor level, everything should be abstracted, so they don't need to understand the technology, but they take advantage of that.
Totally agree, and I hope at that point we stop calling it TradFi and DeFi. I'm just calling it finance.
Same, I think it's just going to be one click away, and that's it.
Cool, yeah, I hope nearly all the assets will be tokenized. We'll all have fully automated portfolios on chain. and a lot of efficiency gains and more security. Thanks, everyone.
Thank you.